Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Good morning. Welcome back to another episode, live stream of 0x Research. Music keeps going. Feeding the ducks. It's a classic. And maybe not the ducks per se this week, maybe the turkeys. We've got our turkey friend bottom right for Thanksgiving. Bucket's dangerously close to just eating him with the placement there.
Ooh, actually, though, surprise, hot take, I love turkey.
Really?
I think it's a great meat. It's very
healthy. Are you particular about it, or like white meat, dark meat, or just any turkey? Yeah, of course. There was a correct answer to that, so that's fair.
Definitely. No, but I like it. Yeah. Are you excited for Thanksgiving? It's not a big thing where I am, obviously. So,
I am. I think it's I don't know. I would say probably a fairly standard thing. U.S. to go to family's house and have a nice dinner. It's a good time.
Are you gonna be with family?
Yeah, I go to my parents. We go to my parents' house every year, and my dad makes a pretty killer stuffing. So that's the turkey's not the highlight. It's usually the stuffing.
Okay, to me that seems kind of natural. I would love I imagine there's very good ham as well. Is this accurate?
No, not ham. I will say maybe more of like a Christmas thing, like a Christmas ham.
Oh, interesting. I guess I'm getting my face. I can't. It's blocking my face, so I have to remove the turkey. I hope you're not too upset with me.
No, I think the classics are probably like turkey stuffing, mashed potatoes, maybe cranberry sauce. Those are like all the classical. Maybe yams. Someone could do yams. Yeah.
Very good. Very good. I have a lot of knowledge of Thanksgiving purely from movies. Always seems to be something going wrong on Thanksgiving. I don't know if that's relevant, IRL. But something more relevant is, great segue, Mainnet launched today. What's your initial reaction? Have you done anything on it? Let's start with that.
I swapped. Yeah, I think launch is always tough. I think because I think the expectations are very high, and the ability to meet or exceed those expectations is very low. So they're probably set up for a little bit of disappointment in the immediate term. I think that's just kind of a natural thing that we see with chains. Price wise, I mean, who knows? Like it's really market dependent. Like we see new launches go up for the first week and then down only for months. Sometimes they just are flat. Sometimes they just go down only for months. But yeah, I don't know. I think a lot of the early setups here are very, like, the expectations are very high, and even the price expectations are very high, and that's hard to meet from like what the chain has to offer from day one.
Yeah, I agree with you. I'm gonna run over some things because I took a look at it this morning. First of all, this to me seemed kind of ridiculous, like an actively managed vault for Monad curated by Stakehouse. Not ridiculous in the sense of like, why is this being done, but ridiculous in the sense that it has a TVL of $20,000, which this is on the main Monad page, right? Like this is app.monad.xyz. This is like their mainnet tweet announcement had this link on it. And then when you click on it and you scroll down, it has 20.8K. Now, given Mellow is not the most popular platform in the world, but still, to me, 20.8K, it seems ridiculously low, right?
The reward token is MVT. I mean, that feels maybe.
That's the receipt token, which is the Monad Vault token. I don't know what the reward token is.
Oh, okay.
The reward token.
What are the details there, I guess? Or is there none?
There we go. Actually, TVL is quite a bit higher. No, it's 886K Mon, which is 21.2K. No, it's rewards are in Mellow. Not great.
Okay.
Also, an API is 0 right now, but realistically, it's still something that I would have imagined more people would have deposited into. Now, this is shout out Cozy, Cozy Maximalist. I don't know if you guys know him. And Xerox Research channel sometimes. He's also a funny guy in general. He's on the Kuro team. They're live. I use them to swap some assets on Monad Mainnet. And it was a relatively clean process. I was a bit surprised at how little they showed the order book process. I guess like the main interaction that I had was with the aggregator. And I'm also excited for FOMO, which I don't know if it's live yet with Monad yet. But apart from that, everything seems semi bog standard. I don't think anything is fully live yet, which kind of brings us to the point that you made, which is day one is always super difficult. You don't know which one of your, like you're a chain and you've spent, let's say Monad has been working on this for 4 years. I don't know if it's true, but let's say 4 years. Someone just found out I'm not American, by the way.
Yeah, that was it.
Like, they've been working on it for 4 years. They've had, let's say, 10 iterations of testnet, mainnet, devnet. You work with 100 applications throughout those 10 iterations. And day one, only 10 of them managed to go live, which is like, first of all, an insane thing that only 10 managed to go live. But also, on the other hand, it's like you have to coordinate with 100 different parties to make sure that some of them go live. And on the first day, you have to organize it such that you have a perps product live, a DEX live, a lending product live, a vault product live, like minimum, as well as bridges, obviously. So overall, I think it's not that bad. They've launched with the necessary requirements. But day one, like day two is always better than day one, first of all. And second of all, like I can't imagine anybody being particularly happy day one of their launch. Like what chain had a good day one, a great day one launch? Probably nothing.
I don't think it exists.
No.
Base had some really infamous rugs. So
yeah. Base had bald, right? Didn't even rug. First 2 days it just only went up, and everybody was like, "Wow, Base is the best chain ever."
Yep.
It's full rug. Another interesting thing is, did you do the Monad? I don't know if you did this, but I assume you didn't do it. But did you do the Coinbase ICO for Monad?
No, I did not.
That's another thing we have to talk about. Price on Mon USDT on Binance right now. This is the perpetual contract, not the spot contract, but it is 2.4 billion. Anybody want to guess what the Coinbase ICO was?
2.5.
Crazy.
Yeah, I mean, I think they got hit by a little bit of timing, as I think probably everyone is aware. Like, I think the MegaETH guys they did their sale like at the top, so to speak, and so there was maybe a nice kind of opportunity there. I guess if you're in the market at that time, thinking, oh yeah, if I get in at the $1 billion valuation, I think this will launch it, whatever, higher multiple from there. I think kind of the same idea existed in the eyes of people wanting to do the Monad sale, and we went into market down throughout the back half of their sale, and so that the pre-market prices, which were previously up at like maybe 5 or 6 billion, have trended all the way back down to the open ICO price of 2.5, and it seems to be basically actively trading like around that price on chain right now. At least that was my experience this morning.
Yeah. Mega is at 3.5.
But still pre-market, right?
Pre-market.
So I think in the case of Mainnet, it's kind of like the token actually went live today, and so we saw those prices converge because there was a reason for them to. Like, I think even if the market is maybe 3.5 is fake, so to speak, on Mega, but you're not going to
volume on purpose.
Yeah, you're not going to start like shorting it now when you don't know when the token's going to go live. But I would expect, like let's say the market is still bad and they release the token in 3 weeks, then you'd expect to see those to converge. But there's no point for it to happen now. It's just, I think it'll just remain dislocated like that.
Yeah, I would expect that as well. MegaETH is also going to be an interesting launch. I don't know what their day one partners are. I had a very clear idea of the Mega Mafia when it first launched. Like it was going to be GTE. I think Euphoria was on day one, Mega Mafia one as well. Avon, the order book guys. And now I kind of don't know, can't remember any of them. Now I just know that Euphoria because Jim talked about it on Friday.
Yeah, I mean, probably the more meaningful thing in the immediate term is going to be, I believe Moned, and I'm sure Mega as well, are going to do like some liquidity incentives on top of things. Like they have the kind of their app list on that site, but I don't think anything is actively incentivized yet or right at this moment. But I believe they've commented on the fact that they will do so. So, I mean, you'd expect to see some movement, some flows around that, right? If there's vaults or LP or LPing or, borrow lend that's incentivized, then I'm sure we'll see upticks in that activity. Again, I think it's just like, I don't know, these are all classical launch the chain short-term things that we'll see happen. And then it's going to be a question of how that translates into medium longer term. But, as in many cases, the expectations are very high. So it's going to be very hard for them to meet that, but I guess we'll see.
Yeah, it's increasingly difficult to launch chains. I think for the longest time, everybody was always saying why do we need new chains? Why do we need new chains? And I think there are some clear examples where you do need some new chains. Just not sure if you need generalized chains. And I think the most vocal person who believes that we need more new chains is Hasib, who anytime someone's like, we don't need any new chains, Hasib quote tweets someone, writes this massive long paragraph, and he talks about like how we're just going to make things faster and faster and faster. I don't blame the Monad guys, but is Monad that much faster than existing chains? I don't think it is. Like I know MegaETH is taking some trade-offs, taking some cutting some corners in the sense of like decentralization. We can talk you can care about that a lot, not care about that a lot. I don't care about anybody's opinions on that really. But I've always had this view that Monad did things the hard way. I think 10,000 TPS is pretty good, but is it that good? Right? It's just kind of crazy to me because we're talking to Harmonic, Ben from Harmonic. I don't think you were on that pod. So Solana, block builder, Paradigm invested in them. Also, they work closely with Temporal, or they're part of the Temporal team. Anyway, the general idea was their entire view is that we want to get to 1 million TPS. Hyperliquid's at 200,000 TPS. The hypercore, not the hyper EVM. I don't know what MegaETH is boasting, but I'm pretty sure it's above 10k TPS. Sometimes they share those images of their Explorer, and I know it's still testnet, so it's not real, but and you can't see anything really. It's just kind of going really fast.
I think the goal is 1 gigagas throughput, which for context, I believe base is 35 megagas, 35 million gas a second versus 1,000 million gas per second. Or does a multiple higher throughput than what's on base today. I guess you could look to Solana and say it's a single digit multiple over their current throughput as well, based on what 1 to 2 to maybe even 3k TPS at peak load scenarios. So yeah, I mean, I think assuming the purported numbers are realizable, in real world usage, then it's a step. It's like a step function of more throughput, I suppose, on a traditional blockchain. I think we can argue that MegaETH's construction is a bit it's a bit different. Like it's not really like an apples to apples comparison with like a, 100 distributed node kind of oriented blockchain versus like one big beefy sequencer. But I think probably the big point, and I don't know if this is kind of where you're getting, but I think that's not really what matters so much anymore. Like it doesn't necessarily matter to just launch a fancier, faster chain and then it's worth more money. We care about the economic activity, the flows, the value accrual back to the native token, which is also always associated with the chain. And I guess maybe my take, which I'd want your thoughts on, is I actually think I'm maybe a little disappointed in both Mainnet and MegaETH in their maybe unwillingness to be more. I don't even think opinionated is a strong enough word, to be more centralizing of like the app experience. Basically owning the applications and then therefore the revenue streams from those applications underneath the umbrella of the native chain token. Because I think what we see now is that like Hyperliquid did this successfully with the Perps exchange and may do this with other things like with Borrow Lend. And I think Solana, while it scaled effectively and caught a bunch of priority fee revenues from lots of activity from meme coins, didn't capture any other part of that flow exchange, and so is losing out now and maybe over the next few years potentially.
Yeah. So this is something that I wanted to talk about with relation to something tangentially related to this as well. So first of all, MegaETH has some attempts at doing this. I think for USDm, we'll have to see how far they go. Now, one thing that I was not fighting, but like in the chat, like Jim and Daniel Smith were talking about how Solana has done more spot volume on Zcash compared to Hyperliquid. Completely correct. Hyperliquid has done, I think, like $150,000 in Zcash spot volumes versus Solana was doing 40-50 mil a day. But the amount of money that Hyperliquid makes off of spot trading volume is multiples more than the amount of volume that the amount of money that Solana makes off of spot. Because on Hyperliquid, when somebody lists a spot asset, 50% of the fees go to the lister. Therefore, listers or I guess like spot issuers are incentivized to list these assets on the chain, bridge them over, figure out a way to make sure that the spot trading is liquid. And Hyperliquid provides the order book as well as the distribution for this trading. Therefore, it captures 50% of that. On Solana makes a lot of money when there's a lot of FOMO to buy an asset. What that means is that when people have to raise priority fees, when people have to raise tips, like Jito tips, etc., when there's a lot of out of protocol and in protocol tipping, that goes directly to Solana's top line. Like that is direct revenue to Solana. But that was not the case with Zcash. And I'm going to check the numbers now as well. But last I checked, so Monad launched on Solana as well through Wormhole Sunrise. I think last I checked, they had sub 1 mil volume, sub 1.5 mil volume across all AMMs. On Hyperliquid, it's like 4 mil, 5 mil. Now, it's not a huge number for daily volume in 24 hours, and no one's going to argue that on either side. But even if Solana was at 10 mil, 15 mil volume, I would imagine that most of that, like, it would make less money, probably factors less money than, multiples less money than Hyperliquid would make on spot volumes of the same asset. Does that make sense? Because it doesn't directly go to, I need to do the numbers on this, but because Solana is so cheap, it's just like it doesn't matter. The like you need to scale trading a lot, or you need to make people pay more and more in gas. So this ties into what you're saying in this way is like, unless you have applications make more money, and this is like trading applications also make a lot of money because they take on fees from volume. So you want as a chain to have some form of like value capture mechanism in that manner, or else you're going to be constantly stuck in this thing where you're trying to increase the amount of transactions that are happening. And I just don't know if there's like a very easy path to do that, compared to like how much more money you can make. Also, Solana has such valuable block space. Like a lot of the times people are like, oh, block space is infinite. Like, yeah, it's infinite, but there's also like valuable block space. And Solana clearly has valuable block space. So it should either charge rent on it or it should build protocols, products that can capture that, capture value on that. Long story short, completely agree with you. I am a bit surprised, but also it's very difficult to build a chain as well as build an app. I think it makes more sense to build an app and then develop it into a chain. We saw actually there's this team called GTE, the Global Token Exchange, on Mega Mafia round one. Do you remember them?
Yeah.
Orange brand. Yeah. Okay. They left. I'm pretty sure they left Mega Mafia, and they are launching their own L1. So, like, that's another question. Like, would I have left MegaETH if I'm GTE? Probably not. There's not that much benefit that you can get off of launching an L1. Apps make more money. And it seems that we're finally kind of, I don't know what the pump valuation is. It should be like 2.5. Like you can launch a very good app and get the same valuation as an L1. So, no, my nemesis is on.
Yeah, pumps at 2.7 FTV.
You know, and like Monad's at 2.5. I'm pretty sure they raise the same amount of money. I'm sure that Pump has way less. Actually, like, I don't know. I don't know when this like valuation is going to compress for chains. It hasn't yet, but it slowly is. So I don't know why. Do you get what I'm trying to say? I'm like jumping from one place to another. But
yeah, I mean, it's just, I think there's kind of a time-based phenomenon here. Welcome on, James. We're talking about valuations of different things and how they make money, maybe as always. I mean, I think there's a time-based phenomenon here, like prior rounds for things like Monad, etc. Like, I don't know, we're still having these things that raised at very high valuations kind of coming out of 2021 that have not hit the public markets until this year. And so obviously their valuations are still relatively like anchored to the upside. So we won't see them potentially get priced downward until they trade publicly, like Monad is doing now. I mean, I feel like there's plenty of examples that support what you're saying, Bach. Like you could look at Berachain, for example, or like Movement, or like XYZ other chain and token that's launched in the past like year, 2 years that have just gone down only since their launch. That basically exemplifies the point that like, okay, they aren't worth that much just for the sake of being a new chain. People care about where potential revenue streams might come from.
Yeah, I'm coming in a little bit late, but I agree with that. And I think like if you think back to like the 2021 cycle, everything was punctuated by lower raises in the private market for L1s, and then you actually had an opportunity to bid them in public markets, right? Like stuff to TGE, like Avalanche, like you actually did have some nice appreciation because price discovery was predominantly in the public markets. So you could like actually bake some of that in as a retail investor. Here, it's like every single person knows as soon as this stuff hits the market, it's going to be a down only chart. So they're like, why am I going to bother ever bidding it?
yeah,
I think, and I wonder if part of that too, you know, I think a lot of the layer one, like the chains that launched in that period as well, may have launched like their tokens initially in 2019 or 2020, and the real like upsurge in liquidity and craziness didn't happen until late 2020 and into 2021. So to your point, there was still like kind of upside in the market. But yeah, I think it's been different in the past several years, to your point.
Yeah, like a lot of it is unfortunate, just like when the team does a TGE, right? Like if Monad TGE'd in January 25 or February 2025, like could easily see this thing being like a $7 billion FTV right now, right?
Yeah,
I agree, 100%. And I think we would have seen, like, to both of your points, like, let's say they launched Q1 2024 when TIA was trading at 20 billion, and Starknet was at 30 billion.
This could be a $50 billion project.
Exactly, it could be $50 billion coin at that particular time in the market, just because of how things were acting. And then I think, like, if that happens, then the chart looks exactly like Box says, where it's like, this isn't worth that much, and it just go down only until today. We priced that in.
I would say one point, it is a bit tough because right now it's at like a very weird middle ground where it's not like Starknet at 30 bill, you have to sell that realistically. Like if you're getting a Stark airdrop, it's not worth 30 bill. Stark's a great protocol, but a great chain, but in no way is it worth 30 bill at that time. You have to sell it. But it's also not low enough the way that James is mentioning, where it's like, you had meaningful time to bid Avalanche and Solana at these lows. It's like at this weird, awkward ground where it doesn't have a proven product, but it's also like not high enough to sell, not short enough, not low enough to buy. It's just kind of like, you're like, okay, well, I guess I'll wait like 2-3 weeks to see what the hell they're up to.
Yeah.
No?
Yeah, totally. 100%. One thing, I don't know if you guys want to talk about it just because it's brand new, but like I'm literally leafing through it now. This thing from Jack, it's crazy.
Yeah, I just saw it as well. Let me pull it up.
Let's discuss.
I don't think you saw it yet, Danny, because
I saw it in the chat. Our old
this
friend,
is legit
Jack
cryptocurrency journalism. This is the stuff you like desperately need in this industry. So hats
Big
off
scoop.
to Jack. This is very cool stuff to find out.
All right, can everybody see my little screen? Yes. Okay.
Yeah.
Light mode.
Do you want to? Yeah, dude. I'm not logged in on this side. Okay, who wants to give the background on this one? Should I start?
You're doing. I just read it. I don't want to say anything wrong. So yeah,
okay.
I'm still trying to understand it.
So Berachain gave their lead investor, which is Nova Digital, under Brevan Howard Digital, which is under Brevan Howard, a very large fund, the option to get a refund on their investment if the token did not do particularly well. This is the best way to do venture investing because you either get a
I would like this deal.
I would love to guarantee not lose money and or make a lot of money. That sounds great to me.
Yeah. There's also some other information here about like frameworks, investments going forth, et cetera, which I don't know how relevant that is for this conversation. But this is a very good scoop. Thank you, Jack. Thank you, Jack Cubanet.
Yeah, I love what Jack wrote here, saying 4 lawyers we spoke to said it was unusual for an investor to be granted a post-TGE refund right. Unlike a typical VC investment, the Brevan fund wasn't taking any risk. Either Bera would pump or they could get their money back. Very, very nice setup for them.
This is very
I guess
good.
the initial thing I would think about is most relevant, and like other investors can produce this information right away. If they have like MFNs within their subscription docs and like they're offering. So MFN, most favored nations, basically means like you're not going to get worse terms than anyone else is offered. And if someone that's investing alongside of you is getting a preferential term, you can get it too. I'd be really surprised if like the protocol did this not legally. Like that would be surprising to me, but I don't know. I'm sure other people that invested in this are scrambling right now to figure out what's going on.
Do you really need a lead investor that bad that you have to tell them, here, you can have your money back if you need it? Do you know what I mean?
Yeah, I mean, you're basically paying, it's a marketing spend at that point, right? You're basically just giving away tokens for free, right? Like,
yeah, but like Brevan Howard is a very large fund, very good fund. Obviously, they're very talented, given that I don't think any other fund has ever done this. It's I'm sure there are other funds that could have led you around that would have just put the money in, and this would have never come out. Do you know what I'm trying to say? Like, I'm a large L1 and I'm thinking, okay, I need to raise. There are 4 to 5 leads that I'm thinking about. I I can either go with one of them, which will ask me for its money back if its investment doesn't go well, or I can go with another one who just wants to invest because he finds my protocol, my layer 1 interesting. Which one do you go with? Right? Like, what am I missing here? How can
it's totally, yeah, it's crazy.
Yeah, I don't. It's weird to me that you would do this rather than, I don't know, KOL rounds or a thing. Like, I'm sure you could have found plenty of. You could have raised money from CT. Like, I don't know. There were plenty of ways, I think, to raise money without giving them a free take backs.
Yeah, and I don't think anyone like Brevan's obviously a very good name, but I don't think anyone looks at it and goes like, "Oh my God, Brevan Howard is invested now. Like, I need to ship everything into this thing." Like the value of the name is not, surely it's not that much.
I don't think so. It seems immaterial to me. Like, I don't think it would have mattered if it was Brevan Howard or pick your other favorite venture fund.
Dude, it's also $25 million. Like, you can definitely raise that off of CT.
Yeah, I think equally it's interesting. Like, obviously we weren't quite back to doing ICOs yet when Bera launched, but let's say they waited a little bit longer, they could have very easily done an ICO and probably raised like 100 million or more.
No, that's very interesting. Yeah. It's great though. Like, I would like Echo to implement this feature, and I would like a free roll on all of my venture investments, if that makes sense. I think that would be very good for me.
I don't know. It seems to just kind of highlight incompetency, if anything.
Yeah. James, what's your take on this? You kind of came in here huffing and puffing.
You give,
no, I just think it's interesting.
Take. I want to clip you in context.
I don't. I would want to review everything else before making a hot take. But yeah, no. I mean, if you were an investor alongside these guys, you probably would be not too happy right now. I'm sure I imagine that conversation's going on in a lot of places. Yeah, it sucks. Feel bad for people.
Well, yeah. I mean, surely they didn't give this to everybody, so I don't know.
No, I think they said. I think in Jack's document they said that they didn't have it to everybody. It was only for Brevan.
That's something you wouldn't know, right? Like, they wouldn't be required to disclose this.
Well, that's the thing. So, like, that's why I mentioned MFNs. Like, you typically have a clause that says, like, if anyone else is offered better terms than what you're investing at, you're given like notification rights to get those rights. So that's why this would be odd.
I think we're at a pretty logical slow point here for me to interject briefly and do a quick shout out to our sponsor for today's stream, Uniswap. Thanks so much, Uniswap. The Uniswap trading API solves the problem of adding crypto to your products without the hassle of needing deep crypto expertise, ongoing maintenance, or liquidity aggregation. The trading API provides access to the Uniswap protocol, which has processed 3.3 trillion in all-time volume, handled over 465 million swaps for more than 25 million addresses, all with zero security breaches. Developed by Uniswap Labs, the US-based team behind one of the most used DeFi apps, access some of the deepest liquidity in crypto, combining both on-chain and off-chain sources for optimal pricing. The same liquidity that powers billions in swaps, now available via a singular API. Thanks so much, Uniswap. Back to the show. Oh, we like this one better.
So, James, what do you think about? We were just talking about Monad Mega. Did you already ask him this, Danny? I got very sidetracked by the whole.
We were talking about valuation when he jumped in, so I'm not sure what you're going to ask.
Oh, James, what do you think about how L1 should be valued going forward? What do you think about valuation in general? I don't think I've ever heard James is, for context, guys. I'm in a few groups with James where we discuss investment methodologies, our ideas, what we should buy and sell at what price points, etc. And I don't think I've ever seen James make any reasonable fundamental or technical analysis. I've never seen him say, "Oh, this token is trading at X valuation, therefore it should be bid." And I've also never seen him say, "Oh, this like is at like." He never draws those crayon lines and is like, "Oh, like it's at support, we gotta buy." But he also does trade very actively, and he says, "Let's bid this, let's sell this, etc." So, James, if you're not doing fundamental analysis or technical analysis, what are you buying and selling off of?
I'm trying to think of a way to say it without sounding stupid, but I mean, I think like a lot of crypto coins trade on vibes. right? And like there is a lot of capital, and I bifurcate, right? Like I don't trade like majors based on that. I don't think that's really reasonable. I don't really trade majors to begin with. I kind of just hold Bitcoin forever. But I mean, like, look, I don't think you like a lot of times in crypto, like let's just talk about Ethereum for an example, like valuing Ethereum from a fundamental or technical perspective, like I don't think would have given you like the correct trading strategy at all in the last like 6 months, right? Like if you were valuing Ethereum on a fundamental basis, you wouldn't have bought it when they announced all the DATs. And then you probably still wouldn't have sold it when the DATs bought everything, right? So like that was, I would honestly say that's probably my best trade that I've made this entire cycle, was just buying Ethereum and then selling it like towards the top of the DAT mania. And I don't know how you would classify that. Like maybe you call that fundamental. I don't know. I don't think that's like a fundamental discounted cash flow type of analysis, but it's just a fundamental analysis insofar as I see someone who says he's going to buy a lot of the tokens, so I can fundamentally buy it before him. That's kind of where I spend, honestly, in all seriousness, all my time in crypto, is just finding those weird little idiosyncratic like opportunities to trade. Like I'm not a fundamental investor. I'm not good at it. I'm certainly not a good technical trader. Like I couldn't tell you if something's going to go up or down 10% over the next couple of weeks. I think that's kind of a fool's errand. Back to your previous question of like valuing things on fundamentals, I think you have like an interesting question of the two L1s, I think, that are stable now, right? Like being Ethereum and Sol. I think they've gotten past the point that they're being valued on like a fundamental basis. I just don't think that they are. And I think they have like the lindiness that they're being valued as something else. I have no interest to debate whether or not that's like store of value or something else. I just kind of, it is, and that's all I really care about. And I look at every other L1, and I think it's probably very difficult for any new L1 to get that same level of lindiness. So I think on a long time frame, they're probably all just going to zero, would be like my overarching guess. But I would never take a position on it. Like I'm not going to go long MegaETH, short Monad. Like I just don't play those games. I just don't think it's a positive expected value to take any position in them.
Do you think that going forward, as these things resemble more and more businesses, I do agree on the sense of like, it's very tough to like Ethereum. I think is that I can't remember. I think it's at like a 400x price to earnings. But it's like that's also like what it always trades at, and then Solana trades at like a 30x price to earnings. So it's like it doesn't make a lot of sense to value it based on that, because you have this like you don't have like a consistent multiple that it trades on, right? So you're just kind of looking at two things that are valued completely differently. Nobody knows why one is valued one way, the other is valued the other way, and a lot of people have died trying to play that like convergence gap where you're like, and I agree with you, like if you were like, okay, well Ethereum's overpriced and Tom Lee puts the gigabit on it, like you're just gonna get bulldozed over, so it makes no sense.
Yeah, and I think like, and I also think to that vein, like narrative based investing, I think is fundamental in a sense. Maybe it's not fundamental in terms of like I'm putting together like a DCF spreadsheet or something, but like you could have constructed a lot of like pretty cogent fundamental analysis trades based on like Trump sentiment going into his inauguration, right? And like Palantir, names like these, like that. I don't know where that falls in terms of like your classification of how you invest. Palantir is certainly not a cheap name by any type of like traditional investment analysis, but like a lot of people put together very cogent trade pitches for that when Trump came into office, as like an example.
Yeah, it is. Yeah, it is. I guess it's very context dependent, and it's very much like it is not vibes. I think like, I mean, I guess it is vibes. It's like vibes plus mindshare plus narrative.
Yeah, and you can also just look at like that. You can look at like the value factor in like traditional equity markets and like momentum, which momentum is probably the best descriptor of like narrative based investing. If we're going to like assign definitions to these, has been way more powerful than the value factor over like the last 10 years, right? And every single traditional value guy that made money before like hasn't made money recently.
Yeah, that's increasing. Okay, well, my question was that if you think eventually these things look more and more like businesses, then do you think, I guess, like that valuation aspect starts playing more and more a role? And in this sense, I guess, like I'm referring more to, let's say, like MetaDAO ownership token style equity token splits take off, where all the entire regulatory and financial landscape changes and all tokens start accruing value some way or another. And these things look more and more like cash generating businesses, I guess. Still valuation ebbs and flows, plus narrative, plus mind share, etc. And not just
Yeah, I think that's probably right.
Yeah, it is. The reason I was asking this is like, for example, today Monad launched 2.5 ago. It gives me nothing, gives me no information.
Yeah.
Right, like I think this is the only place in finance where it actually, I think, apart from VC, maybe, because in VC you're also kind of like blind and you don't know if there's going to be PMF, you don't know if it's going to make any money, you don't know anything about the timeline, you don't know, like there's a product out, but it's very much like I would say Monad L1 today is like an MVP to an extent. Like there's nothing on top of it yet. There's 8 protocols on top of it. We don't know how fast it can go, how much money it's going to make, et cetera, et cetera. I think crypto is the only place where the general public can buy a token like this, or like buy into an investment like this, where there's actually no information whatsoever about it. Like there's
and even the information that's out there, like I can read about like redesigning the EVM from the ground up and parallelized execution, but like I don't actually know what that means, right? Like I'm not smart enough to understand what that means, besides having someone on a podcast tell me that it's very good, right? So like that's not enough information for me to buy something.
Yeah, it is.
Yeah, and maybe one core difference from like maybe a traditional tech IPO would be that, I'm not a valuation analysis expert or anything along these lines, but you can develop the idea or the thesis around like a path towards revenues, recurring revenues, or a valuation that's based on their earnings at some point in the future, from becoming like a cash burning machine to like a cash generating machine. But I think the problem is that in the case of these just like generalized blockchains, that's kind of hand wavy, because it's sort of, we discussed it, we know the picture there. It's like the fees aren't going to justify like the valuations that we're talking about. And so then the other part that we hang on is the network effect. And like James said, is it's going to be this reimagination of the EVM and have such powerful network effects that it's worth so much money. But I think that's kind of where like these just like blockchains differ from, you could take something like Uber or pick your other favorite tech startup, and it's like, okay, they just burn a shit ton of money. How are they going to make money? And it's like, okay, they're growing, and at some point then they'll charge a fee for this, that, or the other service. And actually it's quite the opposite for blockchains, where it's like, no, actually we're going to compress fees even further, and like we're going to try to keep growing. But it's like, okay, but where do you actually make the money?
And didn't Keone have a podcast a few days ago or something? So, maybe I read this tangentially, where he said like it doesn't matter if L1s make money or something like that. I hope I'm not quoting him out of context, but I could have sworn I saw someone post that a few days ago. Which like stuff like that, or I mean, he totally talks about that all the time, right? Like it's just not extremely encouraging for the token price.
Yeah, and I think there's probably a disconnect for them in the sense that I think it's probably true that like an L1 could make no money, but yet still serve as a backbone to a lot of things. It just might then also mean that like
the token,
regular people probably don't want to invest in the token, which can be true. Like those things can be true, and that's fine. You might just have to look elsewhere for things to put your money into outside of like the narrative cycles.
Yeah, but like I would say that a lot of Solana's narrative cycle was purely because it was making a fuck ton of money, right? Like because I mean, the entire REV thing. Don't make me pull Daniel Smith up here and make him give us the spiel, but like that was it, right? That was its narrative. So,
yeah, and I mean, and I think to some extent he'll still argue that point. I mean, I forget the number he always throws around, but it's like 1 million TPS at X percent of a cent is still worth a lot of money.
It's tough because it means you have to monetize these like tiny little units of transactions, and it's like a much better way to monetize in my mind is just to go to Jupiter and say, hey buddy, like, you know, you made $600 million this year. You made it because you're trading apps on infrastructure that I built. Like, here's a subscription model. I don't know, however AWS charges people, it should charge people the same way. Like, AWS doesn't charge individual customers. That would be fucking ridiculous. It charges the business.
That's also a question of like, do you want to be a commercial facing business or a retail facing business? And the answer in like any type of traditional market is always commercial. Obviously, you never want to face retail, right? Like, facing retail sucks. Yeah.
Like, yeah, you want to be as like commercial, like you want to be B2B. And I can't imagine that the world goes anywhere but towards these chains charging the applications building on top of them, or internally building out applications. Also a very valid way of approaching this thing. Like, you can have the chain that just runs in the background, dirt fucking cheap. You don't have to monetize it. You monetize it through like 1 killer app, 5 killer apps, 10 killer apps. But a few valiant efforts at it. I will say, we talked about Berachain today. One positive thing about Berachain, I like that they built up their own stack. Like, it had a canonical DEX, a canonical lending platform, and a canonical LSD thing. Actually, I don't know if it had LSD. Anyway, it had a canonical DEX and a canonical lending, which I think is the directionally correct thing to do. Like, you want these basic low-effort apps that generate an unnecessary amount of money, AMM specifically in this case, and like non-modular, like monolithic lending, which is like not a lot of innovation that can come from it. Just do it yourself. Capture the fees. Why give it to somebody who's just forking something off of Ethereum mainnet? Canto did it as well. The two examples that I'm giving haven't done particularly well, but I think directionally it was the correct thing to do. Yeah, so I'm surprised not everybody else is also doing it.
I think there's other reasons that explain their struggles to perform. Like, I think Berachain is stuck in 2021. Is part of the problem there. Like, I think they're too eager to like redo Ohm type economics and like hope that we can just run entirely on that. I agree with you that like owning some of the application. Here's maybe my thought is, we see plenty of cases in finance where you can just do both. You can serve as backend and also as like a front end to retail. So like backend for businesses and front end to retail. And I think even like some of the most like hyped examples, like in prediction markets, for example, like we see Kalshi and Polymarket basically both attempting to do this, where they have their own kind of existing front end and they make some money on the kind of the fees there from, you know, retail users that trade on it. But then they're also doing partnerships. You know, Kalshi partnered with Robinhood and I think like Webull as well, and they charge them, you know, a fee to basically route orders through their markets. And it's, in my mind, it's like, I don't know, the like lift and the amount of people involved and like the effort to actually do. It's not like you need to go out and build a physical factory to like sell, you know, an API key to your exchange to some business. You just have to sell that to them, sell the idea to them, and get them to agree on the pricing. And so I don't see why there's any reason why like that can't be a meaningful mode of operation for probably basically anything that's building in the crypto space. You can probably sell B2B and you can probably sell B2C.
Yeah. We're kind of taking James out of the conversation because we're speaking positively about crypto, and I assume he's like kind of
well, I feel like it segues to something. I'd love your take here, James and Bach.
I've been pretty measured.
I think it segues, like that point I just made, segues into this idea of like there are, and I think we're seeing this now with, I would say probably Solana as well, and honestly with Keone and Mainnet, they seem to have the same view of like offering this like credibly neutral platform, and thus therefore taking no stance on like selecting and making your own apps on top. Those seem to be like just not compatible ideas. And I don't know. I guess what are your takes there? Like to me, it just seems kind of strange that we see this play out over and over again, like with ETH pushing everything to L2s and then losing out all the value flow to the L2s. Why
One
can't
thing
like
that I
a
did-
relatively neutral platform also just like have some of its own apps that make money too?
No, it should be able to. I think that's right. But one thing I did want to say, Baku, if we're talking like constructive criticism, like I wish we would stop kind of playing the same game of like I think a lot of the problem that all these protocols are facing is not technical in nature, right? It's purely like how they've structured these things. Every single one of these projects is going to continually just raise at a massive valuation, and there is not going to be any natural buyer. And it's not an accident that every single chart looks the same, right? And until we start launching projects at way lower valuations and publicly float all the tokens way earlier, it's just going to keep happening.
Yeah.
So it's a shameless MetaDAO plug, but like it actually is right. Like you need to get the tokens in people's hands at a low valuation quickly, or else you're just going to keep doing this fractal forever and nothing is ever going to change. Like it doesn't matter how good the tech is if you have stuff that's, tokens at such a blistering and high valuation and people are just unloading them on a programmatic basis. It's just going to happen over and over and over again.
Yeah, Ryan asked me this morning about my thoughts on MetaDAO, and my answer to him was it's the only token on my watch list that has put in a higher low. Also, everything bad that happens in crypto is a marketing stunt for them potentially, and it's just the truth. Like, I agree with you. You can show MetaDAO in this case. It's
No, and I sold it because I'm an idiot, but I bought Avicii when it launched at like a couple $1,000,000, and I was like, well, no, I got bored and probably wasted it on something else. But like that's a great example of like a good hot narrative of neobanking. Team seems fairly competent, and like anyone in the world, yeah, you didn't get filled at your MetaDAO ICO price, but like it launched at a super reasonable valuation, and you could have bought it, and now it's probably close to like $100 million valuation.
yeah. I actually thought that this year would not this year, but there are some positive attempts at this. I do think that this pre-market listings happening on chain is a good thing for this, because I think, for example, if Hyperliquid hadn't done Hyperps for Monad or whatever, like pre-launch markets everywhere, I guess like Binance, OKX, etc. as well, then Monad will probably have launched at 5 to 6 bill. Like I do think
Definitely.
that price is going lower
You think?
and lower now.
I'll take the under on that.
So the reason it's actually interesting to think about that. I would have done the Coinbase ICO sale in for me what is relatively decent size if it were not for the pre-market perps. Like I set myself like an invalidation level of like if it's trading below 3.2 at this point, I'm not going to do it. And if that pre-market price didn't exist, I probably would have bought it. So I think it did a great service to people, to be totally honest.
I guess that's fair. It's yeah, I agree with you now. Now I agree with you. You've converted me, James.
Actually, the more information, the better, right? It's real volume, relatively, right? I mean, they're not massive volume, but like there's still volume there, and people are still willing to transact at it. So like that does tell you something.
I think to your point, it's like if you're imagining the average retail guy who just wants to bid the sale and doesn't have a good feel for what the market thinks despite the decline, but can look at just a chart, then yeah, they have a lot more information than they used to have. And so,
yeah.
Okay.
Also, yeah, I think if you're ICOing at 2.5 bill, you're clearly going to launch at least 5-6 bill, right? No?
Well, that was the calculus, right? So my calculus was like, okay, what discount are you willing to trade for a 30-day lockup window, right? And my mind was like 2.5, and my expectation is to sell it at like 3.4 or 3.5, something like that. But just the pre-market perps just told you that was wrong.
Yeah. You would have gotten it today for like 30 seconds.
Yeah.
At free though, not at 3.5. No, I think pre-markets are very good for that. I think the ownership tokens, MetaDAO is good for that. And I think a lot of this is just going to come from the fact that like just time. Market doesn't reward a lot of generalized L2s anymore. Therefore, probably not a lot of them will be able to raise. And if they do raise, they're not going to be able to raise at high prices. Therefore, they won't be able to launch at higher prices. I think this entire ICO thing is probably semi-good until it kind of runs. The bad thing in crypto is like the first few teams who approach things the right way end up doing well by their participants. For example, Plasma did very good with their pre-deposit program because it was at 500 mil valuation and they launched at whatever 10. MegaETH as well. They did it at like $1 billion. They're still at $3 billion right now. So we're gonna like these sonar sales are going quite well. James has to go. Goodbye, James.
Yeah, I gotta jump off. It was fun chatting. Thank you guys for having me on.
Thanks for joining, James. As well. Oh,
just kick them, dude.
He's gone, man.
No, but the last thing I'll say, and then we can wrap it up anyway. We've been here for an hour now. We've been doing our job for an hour now. These first few guys that are good, who attempt this like new form of capital raising or capital formation, or like who launch this pre-deposit program, they do it at a low price such that participants will make money on it, and then eventually that runs out. And after that, like after there's 3 to 4 good guys who let people make money on it, and then 15 people after that raise money and everybody loses money on it, and then it gets normalized. Do you get what I'm trying to say? Like we always have to push it to the point where like nobody makes any money on it and it's a painful experience now, and then it starts getting normalized. Like in crypto, nothing is like good or bad. It's just like it's really good and then it goes to fucking shit for like 3 months. And
I think I'd push back on the framing though. Like, I don't know if I would call any of them good guys or bad guys.
Yeah.
I think this is just how the market works, right? Like if you're earlier and you haven't seen one project instantly get priced at 10 billion, then you're not going to assume that you're going to get priced at 10 billion. So therefore you're going to offer your thing at a lower valuation. But then when you're later and you've seen 6 teams in a row go 500 million, 1 billion, 2 billion, 3 billion, then you're going to be like, well, maybe we should do 3.5 billion. So I think that's just kind of how the market works. And like, when the narrative cools off and like the 3.5 doesn't work out, then it's like, okay, we're going back to 500 million, I guess. Let's start over.
Yeah. And then that's when people start buying again, which is nice. Also, bear markets will help. Like inevitably, just like in all markets, the bust brings everybody's valuations down. Danny, do we have to do one more read?
No, sir.
No?
Thanks again to Uniswap.
Thanks. Shout out to Uniswap. I guess before my producer's not here. I was gonna say something to him. All right. Then just to end things off, make sure to subscribe to the Xerox Research newsletter. It goes out daily. And to our American listeners, happy Thanksgiving week. Happy Thanksgiving coming up.
Have a happy Thanksgiving on Thursday. To all the listeners out there.
All the listeners out there. Danny, anything you want to say? What could he say? Is he stuck?
Did I lag out when you asked me that? That's amazing.
I was like, what is he thinking for so long?
It's even funnier because I said no. So I think we're good. Yeah. Yeah. Clearly, liquidity. Excitement isn't the same. Mainnet trading at the ISO price. So perhaps we need to price things down again, like we were just discussing, for the next round of financial games. But everyone can enjoy, in the US anyway, can enjoy a nice Thanksgiving, and we'll get back to it next week.
Peace. See you
guys.
all on Friday. Oh, no Friday. See you all next Monday.
See you next week.